Their earnings interview, and UK insurer Phoenix Group reported operating profit that met estimates. Asset under administration came in at £304 billion. Well, joining us now is Andy Briggs. He's Chief Executive Officer of insurance and pensions firm Phoenix Group. Andy, thank you so much for being with us this morning. So, a pretty good set of results. When you look at your main challenge over the next 12 months, is it more on results, or is it actually on getting your staff back to work and how you find this kind of flexibility working from home without, I guess, people not feeling that they're part of the group or not getting enough promotions?
Yeah, so Phoenix Group had an excellent first half to the year, and I'm really proud of the way our colleagues, in spite of the pandemic, have continued to deliver strongly. So investors buy Phoenix shares for the reliability of and stability of our cash generation and dividend. And our cash generation doubled in the first half to £872 million. Our balance sheet remained as resilient as ever. But then alongside that, we also delivered strong growth with our long-term new business cash up 15% to £412 million. And a key driver of that was the Standard Life brand. So all in all, our team have done a fantastic job in spite of the pandemic in continuing to deliver strongly for our customers and shareholders.
Good morning, Andy. I can see your cash generation was doubled year on year, obviously very impressive, but your interim dividend is only up to 24.1p from 23.4p year on year. So obviously you're accumulating lots of extra cash. You're not yet paying it out in an increased dividend. What is the plan for that cash accumulation? Will it be paid out later on this year, or is there some other plan for it, or is it for compensation?
So absolutely, we do a great job by our customers, so there's no need for concerns about compensation to customers. Our business model, we do three things basically. We're the market leader in running heritage businesses, so looking after customers in product lines no longer actively marketed for new business. And we invest heavily in that, in migrating those customers to more modern technology to give them better outcomes, better experience. We're also the market leader in M&A and buying other books of closed book business in particular and transforming those as well. And then we're building a thriving and growing open business to offset the runoff of the heritage business and look to grow the franchise overall. So the excess cash we generate, we look to reinvest back into the open business or back into M&A. And from a dividend perspective, what our investors really want is a stable and sustainable dividend into the long term. They want to buy a Phoenix stock. We trade on a 7% dividend yield. That's absolutely rock solid and reliably covered for 20 plus years into the future just from the cash from our existing business. And that's what our investors want to see.
But Andy, undeniably, there's a war for talent. So do you have to pay your staff more, and is it difficult to get them to come back to the office?
So two parts there. Firstly, I passionately believe, we see ourselves at Phoenix as a purpose-led organisation, and I passionately believe that the best businesses have the best people in a truly inclusive and diverse environment and culture, delivering strongly for our customers and focused on the core social purpose, the difference we can make to the lives of our customers. So if you do those two things well, that's how you will deliver best for shareholders. So I've been delighted in the first half that alongside the fantastic existing talent we had, which we continue to develop, we've added excellent external talent that bring new skills and capabilities and perspectives to the group, and very confident we're building the best team in our industry within Phoenix Group.
Andy, you're also the chair of the Association of British Insurers Climate Change Committee, and I just want to ask you a couple of questions related to that. And specifically, what do you think the role of the insurance industry should be in greening the UK economy?
I think the insurance sector has an absolutely fundamental role to play. You've only got to look at the IPCC report this week to realise that climate change is an existential issue for our planet. And so at Phoenix Group, we're the UK's largest long-term savings and retirement business. We invest over £300 billion on behalf of our customers. So we have a fundamental role to play in how we invest that money in order to support sustainability going forward, and the broader industry as well. So I've been chairing the ABI, the Association of British Insurers, so the insurance trade bodies subgroup on climate change. What we've assessed there is that over the next 15 years, in the UK, about £2.7 trillion needs to be spent in order for the UK to hit net zero carbon, needs to be invested to achieve that. The insurance sector can do 0.9 billion of that over the next 15 years, so it can make a massive contribution. And at Phoenix, we take that very seriously indeed. We've had a strong first first half. So we've more than doubled our investment into sustainable investments, up 132% to just under £800 million. Yeah. We've also committed that our own operations will be net zero carbon by 2025. Again, we're on track with that. We're on track to reduce our own emissions by 20% this year, and to move all of our occupied premises to entirely renewable electricity this year. So making good progress.
Right. How do you avoid greenwashing in the financial sector?
So I think what's really important is yes, you need to set long-term targets, but then you need to evidence hard action to deliver against them. It's very easy to say things. What you need to see is hard action and execution and delivery. And that's why we're looking at Phoenix to take a leadership role around sustainability and take actions. Another good example would be that we were the first master trust. So most of the new money coming into the savings and retirement market in the UK is in workplace pensions and master trusts. We were the first master trust to make our ESG fund the default fund. And it's these type of actions that are going to make the difference rather than just talking about it.
How do you ensure that those kind of hard actions are implemented across the industry? I mean, who is it exactly monitoring apart from internally within the industry? Where's the kind of external benchmark? And as kind of Fran implies, it's very easy to kind of sell a story of ESG. That's what it seems like all your rivals are as well. So I'm just, how can customers differentiate between the greenwash story and the real hard action?
Yeah, so all of the insurers are working with, for example, we've signed up to the UN-sponsored Net Zero Asset Owners Alliance and the Race to Zero Alliance as well, and many other insurance groups are, and that gives everyone a series of science-based targets and a consistent methodology and approach. But I've been really pleased as I took that chair and leadership role within the Association of British Insurers. All of the insurers want to get on board with this and make a difference. We realise we do have a fundamental role to play in society here, and we're keen to play that role.
Andy Briggs, can you just give us an insight into how many of your staff you think will work from home for a couple of days a week permanently, even post-pandemic?
Yeah, so, I've been really proud of how well our staff have coped through the pandemic. Even if you go back to last March, April time, when we moved 99% of colleagues to work from home within 10 days, throughout that period, we still delivered excellent call answer rates. Our customers could still get through to us, similar to pre-pandemic levels, and we haven't skipped a beat since. So going forward from here, our focus is very much on engaging with our staff and working out what's going to work best for everyone going forward. And that engagement will focus around that some roles are probably best done office-based, that some activities, some of the more creative project-type work might be best done office-based, and then there's personal preference. And we'll end up very much with a hybrid model. At the moment, we've got about 20% occupancy across our buildings, but that'll be a much larger proportion of our staff that are coming in 1 or 2 days a week, and we'd expect as we get into September onwards, that will start to increase further.
Thank you so much for your time this morning. Andy Briggs there, Chief Executive Officer of Phoenix Group. Now let's get straight to